See, there's unproduction happening. These voluntary cuts are being rolled over. We're not seeing demand come back. So in a way, OPEC Plus are doing what they are supposed to do, bring about some sort of balance to their favor in the oil markets, right? Keeping oil prices here. But for the consumer nations, obviously that's bad news. And so would there be a pushback, I wonder?
I think there should be, at least a political pushback should be. I mean, again, what an interesting time to be alive. We live in a situation when Saudi Arabia announces that the production cuts will be extended into December 2023. And at the same time, it's meeting U.S. dignitaries literally this week. So I think there should be a political pushback, especially think about gasoline prices in the U.S. before the election. That's a really important topic that the Biden administration should be thinking about. Oil prices above $90 per barrel are not really conducive to lower gasoline prices. So, there is a political risk. OPEC is managing its interests very, very well, but there should be some sort of a reaction because so far there has been very little.
And that's what I wanted to ask you. How long is this sustainable? Because obviously we've got that 3-month extension. You used to see, that some of the incidental impacts elsewhere. There's this fear that, because of the Wagner Group and what happened with Prigozhin, that you are going to see trouble in Libya and how that's going to impact their production there. You've got all over the world, Venezuela and Iran, more supply coming online, but I suppose that the real catalyst, like you mentioned, is OPEC Plus. So in your opinion, how long do you think that they're going to maintain basically operating as their own little proxy central bank, but how long can they do this for?
I think the world will be surprised how long they can actually do it. I think we have not seen this level of cooperation between Saudi Arabia and Russia ever. We live in a situation where they actually align their own communiques and publish them simultaneously. Think back to April 2020, when they actually had a price war, one against the other. So I think both countries have realized that there's something more important than just market share. The price is more important. And if they actually can balance their budgets, both have problems. They're each their own. But if they can actually reach it, it's much more conducive than fighting against one another. So effectively, it's producers against consumers.
And I would imagine a function of that is the fact that, you've got the likes of India and China that can get the Urals crude at a cheaper price as well. To their benefit, other countries don't necessarily have as much access to the cheaper supply. At the same time, US, you've got their own energy independence and everything else. So it's some of the other ancillary countries that are suffering. So sans that, because realistically, the way that I suppose I see it, I should say, is without the Biden administration applying pressure, where's it going to come from? Is it going to come from the Eurozone? Because who has the heft to be able to go to the Saudis, go to MBS and say, hold on a second, you need to cut us a little bit of slack here?
That's a very good question, because barring the US, no one can really do it. China and India are not necessarily interested in applying pressure because right now these two countries are the only ones globally that have a competitive...
Maybe not directly, but through demand destruction, no? Because I spoke to the oil and gas minister just 2 weeks ago in India, and he said high prices obviously fix high prices, and that's a common adage in the markets. And so, obviously if it becomes a little unviable for India, wouldn't there be indirect pressure, if not direct?
Well,
they have some leverage because at the end of the day, they are one of the largest consumers of Saudi Arabian oil.
I'm not trying to question narratives. I'm just trying to present a different one. Think about it from a refiner's perspective. Refining margins have been insanely good the entire year. If you have access to, let's say, Iranian crude in China, Russian crude in India, your refinery margins are even better than everyone else's. So, they play their book. They're trying to say, hey guys, lower the price a little bit for us. Don't be too aggressive. But at the same time, they just hide their strength, really. Both India and China try to hide their strength, which pretty much comes from super cheap feedstock. And they will hold it because they are the ones buying it. They don't want to let go of a competitive edge that they didn't have previously. So I think they'll hold it.